So hello everyone, and thank you for attending this session. Well, today we're going to talk about trading the markets amid the US elections. But before we get started, I need to ask you to take 1 minute to go through the risk disclaimer. So the content of this session is purely educational and doesn't constitute at all any trading advice. Okay, so let's start with the question, why do markets care about the US elections? Well, obviously because the US elections could change the entire political aspects in the US, changing the president, changing the administration, changing the policy, and by then it could be impacting the market significantly. But when it comes to trading the US elections, we need to distinguish between two stages. The first stage is before we know the election results, and the second is obviously after. So the first stage is very volatile. Why? Because no one knows who's going to become the president. Everyone is expecting, everyone is speculating, and this is going to bring market volatility with it. But if we move to the other stage, we can see after the post-elections more clarity, more certainty. We can see the markets get to stabilize more. Why? Because the market is going to try to price in the policy of the new president. In that case, we take an example. In 2016, President Trump, when he won, the market started to price in his own policy, in the meaning that the market rallied because his business-friendly policy. Also, when Biden won, he promised that he's going to invest more in infrastructure, and that gave more optimism to the market. Hence the reason we saw the stock market rallying. And then we take an example. As we see here, the market before the elections was going in a clear upward trend and then started to zigzag in a sideways move. Why? Because of the uncertainty. We have too many traders that they are hesitant. Some of them, they want to enter the market, but with a little bit of their firepower, and some of them, they decide, well, I'm going to wait, I'm going to step aside until I realize who's going to become the president, and then I will enter. So as we see here, the S&P 500 has been trading in an upward trend, then it traded in a sideways move, and once the market was quite sure about who's going to become the president, the upward trend has resumed. And also in the Nasdaq. Here, the exact same image. Nothing changed. We have an upward trend, and then we have a sideways move because of the markets or the investors' hesitation. And then once investors knew who's going to become the US president, the market resumed its rally. So, let me ask you this question. Who do you think is going to become the next US president? So if you think that Trump is going to win, please raise your hand. And if Harris is going to win, please raise your hand. Okay, so if you ask me, who do you think, I would say to you, I don't know. I mean, to be honest, I would rather to work on the consequences more on knowing who's going to become the president. I.e. here we have 4 scenarios. The first scenario is Trump winning with the majority of the Congress chambers, 2 Congress chambers. So if he wins with the Republican control, these 2 chambers, that's going to be a kind of a green light for him to apply his own policy. So he's going to cut taxes from 21 to 15%. He's going to be hard-handed on the illegal immigration. And both of them are going to be very inflationary in the US. For the external policy, he's going, as he said, once I'm president-elect, I will start ending the Russian-Ukrainian war. Also, in terms of the trade policy, he's going to resume his trade war against China. And he said that I will phase out some Chinese products from the US market in 4 years. And finally, for the Fed policy, as we see, we have a very inflationary policy that is going to make the Federal Reserve members not really keen on cutting interest rates. And what does that mean? In plain English, it's going to be possibly bullish for the USD, because not cutting interest rates a lot. For stocks, it's going to be also possibly bullish because he's going to cut taxes, and bearish for the gold. Moving to the next scenario, Trump wins with the majority of one chamber only. What does that mean? So his party is going to control either the Senate or the House of Representatives. What does that mean for our internal policy? We're going to have mixed bag policy. We're going to have kind of a mixed policy between Republicans and Democrats trying to bargain a pact between them. So we're going to see a little bit of the Democrat agenda in the bills and a little bit of the Republicans' agenda. Also, external policy, we have less support for Ukraine. We have the exact same thing for the trade policy in terms of China. And finally, the Fed, we're going to have inflationary policy, but not as much as the first scenario. In a plain English, we're going to have bullish circumstances for the US dollar and some stocks, and bearish for gold. So Harris wins. If Harris wins with the majority of the Democrat part, or with the Democratic win, both chambers, what's going to happen? We're going to see her applying her tax policy, hiking taxes, obviously, and also increasing spending. So we have somehow inflationary, but not as much as President Trump policy. External policy, an extension of the current policy. In terms of the trade policy, going to see more bargain between the US and China. And finally, in terms of the Fed policy, we're going to have it as less inflation is going to lead the Fed to cut interest rate more quickly. That's going to be bearish for the US dollar and stock, except real estate, because it's going to provide a 25,000 check for first-time buyers, and bullish for gold, obviously. The last scenario, internal policy, if she wins with a majority of one chamber, that's going to lead the Democrats and Republicans to have kind of pacts also. Another mixed policy. Then the external policy obviously is going to see more extension of the current policy. A trade policy, more bargains with the Chinese governors or the Chinese government. And finally, for the Fed, we're going to have also somehow a less inflationary policy. And that's going to lead to a bearish US dollar and some stocks, and bullish for gold. So, the question, how to trade the US elections? Well, to answer this question in 2 words, risk management. Why? First of all, I need to apply the risk management tools. I need to follow the market's updates. I need to find out exactly what kind of ideas every candidate is defending. Hence the reason I will realize what kind of sectors are going to benefit from each candidate. Also, I don't want to over-leverage my trades. Why? Because we started our session with a very heightened volatility. And the biggest enemy for me, it could be the volatility. So I don't want to over-leverage in order to not get my account hit severely by the volatility. So to conclude, the US elections trading could be very challenging for traders. However, I need to follow up the market. I need to follow up the news. I need to follow up what kind of results are coming from the Congress elections, because the Congress elections is not lower importance from the presidential elections. And also, I need to keep in mind that I have to save some firepower or some dry powder aside. If I was mistaken and I bet on the wrong candidate, at least I could have some money to come back to the market and try to catch up with the market trend once the market starts to trade in a specific clear trend. So as we said, I need to be always following the polls. I don't want to be impulsive. I don't want to build only on all my money on one trade based on one piece of news, for example, at a poll that favors this candidate on the other. Because we can find out that there is a margin of error in these polls. So I need always to have more sources of information to trade smartly and to make a very clever decision in terms of trading. So that's it for today. Thank you for attending.